Hello chị Thu Vân. Hello everyone.
Hello Minh Châu.
Hello chị.
Oh, MC is here.
MC is here. Hello Sergio, Alex, and Elvis. Thank you for coming. Okay. So today hello Jay, you wanna come over here and sit here? Let's chair for you. So we will talk about something different today. Have anyone heard of ITIN loan before?
Yes.
Yes, Sergio. Yeah. Tell me a little bit. What do you know?
ITIN is coming a long way. The ITIN number starts with a 9, and that means somebody who the federal government gives them a number for them to do taxes at the end of the year.
Because they don't have the Social Security number,
Because they
right?
don't get
Yeah.
Social Security number.
That's right. That's right. Awesome. So Sergio, know this program is for people who doesn't have Social Security number, but they file taxes in the U.S. So the government gives them the ITIN number. All right. But before we go to ITIN, we're gonna review a little bit about what you learned the last few months, and I hope. Okay, I have one question. Is anyone comfortable with all the program up here and say, I can tell about all this program to my client? You can go ahead and raise your hand if you feel comfortable. Yeah? You think you can do that?
It's only zip specific. I'm still not really familiar with that.
Awesome. Who else? Any program that you not? I love it. I love it when you tell me that. So, anyone, are you all familiar with all the program up here?
Yes.
Alex, yes, awesome. Awesome. Anyone who feel like I'm still not sure about such a program? Which one?
I'm not sure about FHA and zip.
Zip and FHA. Okay, cool.
Do the asset qualifier one.
You not so sure about the asset qualifier. I want to know. And what else?
The ITIN.
The ITIN is we're gonna talk about it today. But awesome. Okay. So we're gonna review all this together until you say like, this is nothing to me. I can talk to my client about all the program up here, no problem. Okay. So the first one, I think most of us know what it is. Forgivable equity builder. Shout it out. What is it?
10% down, 10% down payment.
10% free, 10% right? Down payment assistance.
You should be a first home buyer. You need to stay in the property for over 5 years.
The home buyer had to stay in the property for 5 years. You are good, and had to be first-time home buyer. Awesome. So I think by now everybody should knows about this one because everyone out there are looking for something like this.
I have two things to add on this. So every year, I think the government will send 1099 to the owner, and the owner has to pay tax for
Yeah,
that.
because
So it's like they get
The taxable.
So if they get 100%, so every year they will get 20% forgivable from government, and government will send the 1099 letter to them. So the owner has to pay tax on that amount.
yeah, that's right. Yeah, because for example, if somebody buy $100,000, $1 million home, and they get 10% from the forgivable equity product, that means $100,000 for down payment. So each year they live in the house, they got 20% of that $100,000 forgive by the government. So that means each year the government give them $20,000. So that $20,000 have to be filed in the 1099 as an income. So they have to pay tax for that. But that's still good, right?
Good point.
Yeah.
Still
So
better than nothing.
I want to clear part of it. So you need to at least have a 20% for that.
So 5 years, why do you have to live there 5 years? Because each year
But you
the
need to start
government
with
forgive them
20%.
only 20%.
Okay.
If they live there only 2 years, and then they sell the house on the 3rd year, they're gonna be forgive only 40% of 100,000. That means 40,000. They have to pay back 60,000.
Mm-hmm. Well, that's not bad.
That's not bad at all. It's still good.
Doesn't mean you need to live like for 5 years in order
Just
to get it.
Yeah, you have to live there for all 5 years to get all 100,000 free. So
But
that's
cannot do refinance or do anything within 5 years.
Mm-hmm.
good. I know it's good. You've been doing that. So So what Anna's saying is, in that 5 year, you cannot refinance your loan, you cannot change title, you cannot sell the house. If you do any of that, that's when you have to pay back whatever amount left, because you only forgive 20% of the 10% down payment every year you live in the house. Got it, right? Like everybody should know really well about this program right now. So, My Home Assistant, what is this program?
The 3% down.
3% down payment. So someone not qualify for the 10% because the 10% have a limit income very low. So if somebody have higher income, they can apply for the My Home Assistant, which give them only 3% down payment, and it's not free. It's a 1% interest on the My Home Assistant program. 1% interest. It's a deferred payment. That means they don't have to pay. That just stay in there, and it's whenever they refinance or they sell the house, they pay off that 3% down payment. And whoever qualify for the My Home Assistant, they also qualify for Zip Specific. And Zip Specific is
Pay closing costs.
closing costs. And the closing costs, it depends on each loan, but it's only up to 15,000. That's another loan, but it's 0 interest, no interest at all. But it also defer payment. That means they don't have to pay it each month with the mortgage. So the Zip Specific and the My Home Assistant, the 3% down payment and the closing costs, just stay there as a lien on the home. The borrower or the buyer only pay it when they refinance or cash out or sell the home. Refinance or sell the home. Any question? Are you clear yet, Anna?
I will need to read it.
It's really easy. When you apply for the My Home Assistant, you just have, so there are going to be 3 loans in this case. So first loan will be the big loan, the very big loan. The first loan gonna be maybe it's 97% or maybe 30%. If they have more money to bring in a down payment, maybe 20% more, 23%. So about 77% the first loan. If they have 20% down payment plus the 3% from the My Home Assistant. But anyway, there's a first loan. The second loan is the My Home Assistant, and the third loan is the Zip Specific. There are 3 loans in one transaction. And the My Home Assistant, the second loan and the third loan, defer payment. You get it, right? Defer payment, that means they don't have to pay monthly. And the My Home Assistant, 1% interest. Closing costs, Zip Specific, 0 interest. No interest on the closing costs. Any question, anybody on the Zoom? If you have a question, you can always ask. Yeah, until go ahead, unmute yourself. You mute yourself.
You're good, Yeah.
Okay. Thank you, Michael, for having me on the meeting like this. Just to let everyone know, I'm from Arizona, so I'm not in California. And I look at watched the clip that Michael forwarded to me on the Facebook, and I noticed that you talk about the first 3 programs. And my question is that are they specific to people in California, Michael?
All these are California. The first 3 programs I'm talking about is California only.
Okay, all right. That's what I want to confirm that. Okay, thank you.
Oh, thank you. Okay. So, we cleared the first 3. Now we're gonna go to VA loan. I think everybody heard about VA loan, right? What is it? What is it about it? 0 down payment. You have to be who to qualify for this program? Veteran, right? So this program, we don't even need closing costs. We can finance closing costs and down payment into it. Okay, Ian talked about FHA loan. She's not sure what it is, or she heard of it. Okay, FHA loan for owner-occupied, but you don't have to be first-time home buyer. They allow 3.5% down payment. Okay. Again, owner-occupied, that means you cannot buy it for investment purpose, okay? For FHA loan, what difference between the FHA loan and the conventional loan? For FHA loan,
You have to pay PMI, the insurance upfront.
there are 2 PMI.
2 PMI.
Good, Anna. So there are 2 PMI. The first PMI is the upfront PMI. It is a one-time PMI. It's 1.75% of the loan amount. One-time payment. 1.75% of the loan amount, and it one-time pay. And that can be financed. That amount can be financed. Most of the time, how do I do that? I lock in the rate that credits enough to pay for that 1.75%. Because my client don't want to have a bigger loan, and they don't want to pay it for themselves. So we lock in the rate that cover it. So normally it take care of it. The second MI is the monthly mortgage insurance. Doesn't matter how much down payment. You have 40% down payment, 50% down payment, but as the moment you choose FHA loan, you have to pay monthly mortgage insurance. You cannot get it, away from the MI. And there is no option like lender pay MI or borrow pay MI. It always borrow pay MI. Okay. When you submit a loan in, the only difference is you have to get the case number, because when we submit the FHA loan, it's a government loan.
Yeah.
So each social security number will attach with the case number when they submit the FHA loan. For example, if your client come to you, submit a loan with you, FHA loan, and he go to another broker to submit the loan, you will know right away, because one social at the same time only can have one case number. So they cannot go unless you have to allow them to go. So FHA loan, once they submit the loan with us, they stay, because their social stick with the case number that we get for them. Okay. Any question?
I have a question for FHA. So FHA, the PMI have to pay until the loan amount is done, or you just pay the PMI until it's the equity 20%?
Good question. For monthly MI, you will have to pay it as long as you have the FHA loan. How to get out of FHA loan is to refinance into a conventional loan. Okay.
So it doesn't matter like how many percent you get down, you still have to pay for it?
Yeah.
Monthly.
Yeah. Yes, Alex.
Can the upfront MI, can the seller contribute on that one? Can we negotiate the seller to pay?
Yeah. Yeah.
Okay.
Yes, Alex.
If they're willing, yeah, of
Yeah,
course
they're
it can be
willing to,
negotiated.
yes.
Okay.
Oh,
Everything
you remind me of
negotiable.
something. Oh my God, you remind me of something. I like. Oh my God, I want to talk about it. Yeah, okay, because I already talked about it. I have to bring something new to the table. I supposed to talk about it today, but I forgot. I just focused on IT. Okay, we have a loan program. It's really cool. Really cool. It's allowing us to give our borrower to pay less monthly mortgage payment. For example, if today rate you lock in at 7.5% for 30-year fixed for conventional loan, the first year they only pay, instead of 7.5% monthly mortgage payment, they say pay 5.5%. So the first year, the first 12 months, they pay their mortgage based on 5.5% of interest rate, not based on 7.5.
Who said that? I mean, lender or?
This is lender. We have this lender. Okay, so again, they lock in the rate at 7.5% for 30-year fixed, but their first 12 months they pay mortgage based on 5.5% interest rate. And the second year, they pay their monthly mortgage based on 6.5% of interest rate. So that means the first year their interest rate was 2 point less, and then the second year 1.1% less. The third year go back to the 7.5% all the way to 30 year. Your question is, how do we do that? What allowed that happening? Okay, this is for us, for all real estate right here. This is for us to go out and sell. If you are representing the seller or the buyer, this is your chance. Lender will allow this because they want the seller to pay the difference to the lender. We have the calculator. I never showed you guys. I was about to talk about it. For example, when we run the number, last time I run the number, my client buys 870,000 loan amount, right? With 20% down payment. And I lock their rate at 7.5%. And after 2 years, they save, I think it 16,000 because they pay less. The first year, every month she paid $900 less, and the second year, every month she paid $500 less. That's a lot of money. So they save about $16,000 for 2 years. I forgot how much, but anyway, about 16,000. The seller is the one who pays 16,000 to the lender. So when you help your client, you negotiate. Whatever you do, you have your magic. You negotiate your listing agent or seller agent. You negotiate with the seller. They can increase the price a little bit, but because the buyer cannot pay for himself, and you guys, we cannot pay for them either. Only the seller can. So what the lender do is they want to keep the sale price high in the market. They don't want to, because they want to keep the sale price high, and they always want to help the buyer the first 2 years when they just buy the home. So it can be anybody, it's not first home buyer. As long as you negotiate with the seller to credit the buyer the amount of money that we need to allow the buyer to save money in the first 2 years, we can get it done. And I can run the number for you and you can negotiate with the seller. But if the seller agree in your addendum, you have to say, normally it's about 2%. 2% credit to buyer for to buy down rate or closing costs and closing costs. Because if they give 2% and we don't use all 2%, the rest can go to the closing costs. We have to be specific. The credit 2%, seller credit to buyer for buyer to buy down the rates or for the closing costs. That's all. I need the addendum. I can do that for you. So when you go out and you talk to your buyer, you don't need to tell your buyer so detailed like what I just tell you. You just tell them, if you go with me, I can help you to get the house, and the first year your payment is 2% less, and the second year 1% less. By the third year rate gonna go down, you're gonna refinance for you. I will take care of that for you. You don't need to know the detail because you are the one who negotiate with the seller or the listing agent. And that's how you're gonna, first of all, you keep your client staying with you. Secondly, you help them to get the lowest payment right now. Because right now rate going up, it's 7.5 and it's gonna go up to 8.59. And that's the only way to keep them still wanna buy. Because right now the monthly mortgage scare them away, right? So there are people, all they care is the monthly payment because that matters, right? So that is the program right now. It's really new, it's really hot. Go out and sell it with your client, say, I can help you. Don't worry about the rate. The first year you pay 2% less, the second year you pay 1% less.
I think it's good for a first-time home buyer because they will be so scared about their monthly payment. And these 2 years of we call it, I think I've heard this before, it's a graduated payment mortgage, mortgage that starts at 5 and then 6 and then 7. In our case, in my case, when I learned it, it doesn't matter what part of the real estate it happened, is that it can start at 5, it can start at 6, and then 5 and then 6, 7. Or 4, 5, 6,
Yeah.
but it'll be for 2 years.
Yeah.
So it's a good 2 years for the new buyer or the new first-time buyer to get accustomed to the payment. It's not going to be like at 5%, 7% right away. It's be 5, 6, and 7. Then on the third year, they're already okay.
Yeah.
Yeah.
And then we can refinance by the third year.
Sure. Yeah.
MC, I have a question. For this, during this all past years, this is mostly the seller's market. I'm not sure how that, as a buyer's agent, you have some kind of negotiation power to negotiate with the listing agent or the seller. I think
good.
very tough.
Okay. It's good question, Elvis. But I see that seller is shaking right now. When we list the home, they really want to sell it. They do. Even though the market's still seller market. But because right now, as we see, buyers are shaking too. When they buy, they back out a lot. Like many people in contract and they cancel it. So seller, they go say, I want to sell. Once they put the house on the market, they want to sell it. Whatever price they want to sell, you will know better, right? So you have this buyer is good buyer, but the only thing is they're afraid of the monthly payment. Can you help them? And they go, we have to work with the seller, with the number. As a listing agent or selling agent, you have so many tools to work on. I mean, you know better than the seller how to sell this house at the best price, or how to make sure the transaction gonna go through.
Give them more option, yeah, based on the number.
Because I remember 2 weeks ago, one of the transaction fell out because of the monthly payment, and then I remember both the listing agent and the selling agent, they join in and say each gonna give the buyer the money to buy down the rates. But at that time, we didn't have this program yet. 3 or 4 weeks before, we didn't have this program yet. But even at that point, the buyer is still backing out because even they give 15,000 to buy rates. The monthly payment is still more than the buyer wants to do. Because when we buy direct like that, it costs so much money. But when we do the program that I just introduced, it's the 2-1 buy down. It's a lot cheaper. I look into a rate, right? For 7.5 go down to 5.5. It only costs the seller for the 2 years. It only costs the seller like 16,000. But if we buy down rate for our client from 7.5 to 5.5, 76,000. So that's why when the other two parties join in to pay down 15,000, it's nothing. The client cannot afford it. But if we do this 2.1, it will fly. If I knew about this, if I had this program before, that transaction would fly already. Because we didn't have that before. 15,000 is nothing. Because the rate go down very minimal, like 0.5%. But for this one, it go down 2%.
Well, not all, again, always not all transactions gonna be like this. So don't be afraid to use it when the time comes. And it's just a matter of telling the seller, hey, you're not the buyer is paying for this anyway because we're raising the price.
Yeah.
So it's technically the seller is not should not be concerned on that. The only thing she probably needs to concern is the taxes on the 2%. I mean, to the 2% raise when they ship out taxes. But it depends on how you negotiate it. But don't worry about it now. You can use it. It's a tool.
I think for now it's very easy to negotiate with seller. It's really easy to negotiate with them because I've been talking to the seller lately and they really are scared too.
But
even though that's still their market.
All these past few years is tough to.
Not 2021, not 2021. It's 2022. Different. Seller now is really. I remember one home that we listed a few months ago. The seller keep telling us to go down the price. We say no, and then we sold it at a good price for him. But seller want to go down the price, and we didn't want to go down the price. He say, can you lower the price by 50,000? We say no. Let me sell it, and we did sell it. So seller now is more shaking than anybody else. So it's okay to negotiate. Okay. Yes.
Can I make a comment? I have a question. And at first someone mentioned about the TPM, the rapid payment mortgage. I think this program is different because of the seller will pay, not the lender. So that's a bit different from the TPM. And that's my comment. My question is that the program we're talking about here, is it applied to this particular lender, or is it industry-wide that applies to other lenders?
Okay, this program right now is with UWM, and I think eventually all more lenders are gonna do it.
Okay.
Okay, I think Rocket will do it too.
Okay. Thank you.
Yeah, of course. All right, so we clear there. So we talk about VA FHA loan, P&L. Okay, P&L is profit and loss program. Who remember this program? Who is this for?
Business owner.
Business owner. Yes. What do we need to submit to lender?
No
Only
tax
the profits,
return,
not
no
loss,
W2,
yes.
only P&L.
We need profit and loss, the 2-year profit and loss,
But
okay?
you don't.
And
you don't-
business license for 2 years.
2-year business license, exactly. So people say, why do we apply for this program? Why do we need this program, Anna?
Because the business owner, they can file the tax return very low, and the tax return is not qualified for the loan amount.
Awesome. So Anna is saying for a lot of business owners file tax with a lot of tax deduction. So
There's no income.
There no income or minimal income. They're not qualified for a mortgage if they submit the tax return. So we don't want a tax return. We don't care about their W2 or 1099. All we care is their profit and loss. And who will prepare the profit and loss?
CPA.
Yay. Or
CPA.
the business owner by themselves.
Or the business owner. So there are two ways of filing a P&L. So either by the CPA, if the CPA fill out the P&L, then we don't need their bank statement. We only need the current balance. But if the borrower said my CPA doesn't want to do my P&L for me, I have to do it myself, then we need 3-month bank statement from the business of the borrower. Any question? People on Zoom, any question? Okay.
Okay.
Anh Trương, you mute yourself again.
Yes, but because in the past, I noticed that some business owners, they ask the loan officer to prepare the P&L for them. So that's why I was about to ask if the loan officer job to help them to do the P&L for them or no.
You said the loan officer doing the P&L for the client?
Yes, that's actually the client's request is that the loan officer do the P&L for them. Because the reason is that some situations are slow to help them out, so that's why the loan officer have to help them.
Okay.
That's why I was asking if you or your team over there had to do the prior week before, or just the job of the CPA.
Okay, it's kind of hard to hear. But anyway, the P&L is not our job as a loan agent to do it or a loan processor to do it. It's either the borrower or the CPA.
But I don't think that's a good idea for the loan officer involved that because that conflict of interest.
It is really
Yeah,
not
then
good
you
for a loan agent
You
to
gotta
do it.
vote your license. So.
You can show them how to do it.
Yeah.
Yes, yes. So how come today's speaker is so hard to hear?
Yeah, no,
Anna?
Seriously.
It's okay.
Okay, so we don't want to be liable for all that, like P&L, VOE, we don't want to be liable for any of that, so we don't do it, okay? So that's not our job, okay?
Thank you.
So the P&L is another program for business owner that we don't have to turn in tax return W2 pay stuff, okay? And then we have VOE. VOE should be written VOE, verification of employment. Why do we need this program? Like I said last time, there are people, they earn W2 income, but they are filing tax with expenses. And then that's also deduct a lot of income from their tax return. And if we turn in tax return, for those buyers, they not qualify for a mortgage. So we have the VOE program so that they don't have to turn in tax return. They don't have to turn in pay stuff. All they do is bring the VOE to the HR, have the HR fill out. Some people, they earn so much, but if they put it in tax return, it's nothing. So we only need the VOE and that's gonna work. So that program VOE for people that don't want to turn in tax return. We have,
So I have a question, MC.
yes.
So if the lender just look at the VOE instead of getting a detailed real 1040 for this borrower, is that right?
They don't look at the 1040, they only
Really?
look at the VOE. Because the VOE would tell how much they earned the last 2 years.
Yeah.
Yeah, they don't look at the tax return at all. They only look at the written VOE. That VOE will be filed by the HR personnel. And before drawing the loan doc, lender will call the HR personnel to verify again.
Now, how does the lender's underwriter determine the expenses? You know, after the gross earning you have,
whoever earning W-2, lender don't care about their expenses.
Really?
No.
Wow.
Yeah.
Right now, situation real life. You know, a lot of people have a high-tech job. Their income is high. Yeah. And they have also very high expenses. They make a lot of money. They spend a lot of money.
Yeah. Yeah, good concern. But that's why these programs, the P&L and VOE, those are high-risk loan programs.
Yeah.
And that's why their interest rate is different,
It is
higher,
high.
right? It's higher.
High risk.
Yes, yes. But it's good we have it.
Mm.
And there's gonna be more. The high interest.
MC, I have another general question. Let's say prior to 2022, let's say from 2018, 2019, 2020, or even 2021, all those 4 or 5 years, did you put the borrower under annual adjustable or 3-year arm, 5-year arm? Did you have such a loan?
I have those loans, but in the past 4 years, I didn't do any of that because the rate was so good for a 30-year fix. My 30-year fix is always better than the ARM rate, so I never choose ARM. I only choose ARM when it's better than 30-year fix, but because we have 30-year fix so low, we never use ARM. But right now, we start using ARM. Right now, because rate is so high,
Why?
we start using ARM for jumbo loans. Like right now, jumbo loan, the rate is lower than conventional loan. I just closed one transaction, 5 point what? 5.6, right? Phụng á, Phụng. What is the rate we locked for her? 5.7? 6? We locked for her jumbo loan like around 5.625 or 5.7. It's 7 arm. It's a lot lower than 30-year fix right now we have. It's a lot higher. So right now we're using arm
Yeah.
when it comes to jumbo.
If the borrower had like a 3 years arm, you know, that would be in trouble. Because right now they need to refi. Because the 3 years arm already. So they come to right now current year to year adjustable is more than 7%.
But I don't think we have any of that because the last 3-4 years nobody do arm. So I don't think we have any. But right now, whatever rate we lock, 2-3 years later we're gonna have massive refinance. I can't wait for that day. I can't wait because right now people rate at 7, even 8%, and for non-QM loan it's 9% or more. So the next 3 years I will be so busy refinancing. I have to be ready for that day. So learn all the program.
Quick question.
Yes.
You mentioned the VOE for the high-risk borrowers. Why is that?
Because we don't look into the tax return W-2 or pay stuff. It's just the one form written by the HR, the income, because Elvis was concerned how about their expenses. And some people, they have a side business and they lose money for the side business. That's high risk because we don't know all about their income or loss of profit. We don't know all. So that's why it's high risk. Okay?
Thank you.
Thank you. So we also have 12-month bank statement. Who is this program is for, everyone?
Business owner.
Business owner, QD, yeah. So this is another program for business owner.
Self-employed.
Self-employed, we need, what else? So for self-employed, normally what do we need, Anna?
I guess we did.
For self-employed with 12-month bank statement, beside the 12-month bank statement, what do we need?
Newcomer.
2
2 years.
2 years
One
of,
statement.
no, 2 years of business
Oh, business
license.
license, yeah.
Whenever it comes to business borrower, we need business license of 2 years because lender want to make sure this person is in the business for over 2 years. That's it. But for 12-month bank statement, it can be personal bank statement or it can be business bank statement. But when we turn in the 12-month bank statement from the business account, what happened?
50% deduct for each spend.
50% of the average deposit will be deducted as business expenses. So only 50% less will be the income. If we turn in the 12-month personal bank statement, what is the income, the monthly income?
Oh, it's only deduct 50%.
No, we don't deduct
100%.
50%. It's 100%. The average deposit will be the income for the buyer or the borrower. Okay, so we talked about this last time, but this is just another option for business owner. Okay, last week we talked about asset qualifier. Who remember what is this program? Why the name asset qualifier? What is it? What does it mean?
Qualify with your
All
assets.
assets.
Qualify your mortgage
All
with your
assets.
own asset. If somebody have a lot of money in their stock account, 401k, and some money in their saving checking, we can use that as income, and we don't need them to file in. We don't need their work history. We don't even care they have a job or not. We can completely leave it out. We don't care about those. So this is another program that awesome that we have here at PacificWide. Remember, all this program that I put right here, broker out there, they have VA and FHA loan, but they don't have the rest of it. Okay, we have every single crazy program in the world. So at PacificWide, when you work here, you learn everything. I'm honest to you, people outside, most of them do conventional loan only. And because I've been talking about this so much, they say, do you do conventional? I said, of course, I do conventional loan. But because I want to talk about this program because other people don't have it. If I talk about conventional loan, then I'm just the same as the rest of them. Right? Because I've been doing conventional loan for 20 years. But we have everything else that a lot of them outside, they don't have it.
I think, let me see, conventional loan should be take up 95% of your business.
It is. But because we also need this 5%. They bring me business the last 3 years. All this, I haven't talked about no docs, okay? No doc is amazing loan products that I've been making so much out of it.
So we have no dogs too?
We have no docs, we have everything.
You have no
Next
doc?
week, we will talk
I
about
like it.
foreign national.
You have a no doubt?
Stay.
I
Yes,
like it.
no doc, we need nothing.
How much now?
Rates, you're over 9% for sure. So, but people are still happy with the no doc loans because look, the conventional loan now is 8% interest rate, no doc 8, 9, 10%, no problem. No
See,
problem.
another silly question there here. Asset qualifier, I mean asset, even we talk about the conventional loan, they still look at the asset, you know, how much money you have in your stock account, you know, already inside the underwriting verification for the conventional loan, right?
Yes, they do look at everything. When you submit the loan for conventional, everything, you still submit everything, right? Okay? So asset qualifier is awesome. And a lot of people have money, trust me. They have so much money. Now, we're gonna talk about ITIN loan. Okay. 2 more weeks, I will test everybody on the product, and whoever get it right, I will give you a prize. How about that?
Yes.
Yeah.
I will show you.
You have to be here to get the prize.
There's a
Yes.
test,
You
you
people
mean?
don't get the prize. It's gonna be
Yes.
test.
It will be in person.
In-person prize.
Looks like everybody like cash now.
Okay, you get cash.
I can drive over there real fast.
Okay, next 2 weeks, you try over here, you get a prize.
Yes.
You're gonna have a test, and if you get it all right, you're gonna get a prize. Right here at PacificWide, the prize will hand out at the same time. Okay. I can't wait to see everybody in the office the next 2 weeks. Wait, today, the next 2 weeks gonna be what day? Next gonna be November 1st, and then November 8th. Okay, November 8th, we're gonna have a
Nice,
test.
easy to remember.
Easy to
Election
remember.
day.
Let's do it
Tuesday,
next week. So
November 8th.
you wanna do next week?
Yes.
Okay, November 1st, and I want to do the test on November 1st. We're gonna prepare cash for everybody who get it right, all the program, okay?
In person.
In person at Pacific.
$5 cash.
No, $10 cash.
I go for chocolate.
Okay, you go with chocolate, I'll get you a chocolate bar. Okay, now we go on IT. Let's look at IT. Actually, I want everybody to remember all the products so you can really go out and help people. Our job is to help people to get the product that fit them, okay? So today we talk about ITIN. ITIN stands for what? Individual taxpayer identification number, right? It's right there. That stands for individual taxpayer identification number. Okay. So that means for people who have no social security number, but they file tax in America and they have this number. So, Gina, read me this slide. So actually read me one thing at a time.
Yeah, so no social security number is okay. 30 years fixed only.
Okay.
It's OO.
Only. OO is owner occupied.
Owner occupied, second home. No?
Non-owner occupied. Okay.
Oh.
So I always put OO as owner occupied and OO as non-owner occupied because that's a lot shorter to write. It's easier to remember. So that means this product is for almost everybody.
Yes.
Owner occupied, non-owner occupied, and second home.
Second.
And it's the only program we have is 30-year fixed. We don't have ARM. We don't have 15-year fixed. Remember that? Prepayment penalty for non-owner occupied only. PPP means prepayment penalty. It's not the government assistance. But I don't even know what that means, PPP, before. I don't even know it.
Oh, it's a government program during the pandemic, you know.
Yeah, something pandemic. But PPP here is prepayment penalty for non-owner occupied.
This PPP pandemic, payroll, payment, something like.
Oh, okay.
Yeah,
So we only need this PPP. We don't need that PPP. We need this prepayment penalty. Okay.
You somehow among your friends you didn't get any PPP loan. During the pandemic?
I don't even know. I don't ask. I think people
I
get
think some
PPP
people
everywhere.
get PPP.
Yeah, I think we even talk about it during pandemic to help the business owner.
Or you just MC just miss out the PPP loan.
Okay, so PPP is prepayment penalty for non-owner occupied, and it can be 1 year, 2 year, 3 year. We have to select which one. The higher than if it's 3 year prepayment penalty, the rate is a little better. Okay. So properties exceeding 10 acres require pre-approval from lender. So if your client go and buy a property that over 10 acres land, then we need a pre-approval before we really say yes or no to the client. Even we pre-approve them as a borrower, but the property have to be approved by the lender before we can really submit the loan. Okay? Maximum debt to income ratio, DTI means debt to income ratio is 43%, meaning it's not a lot of rooms. Okay? ITIN card or IRS ITIN letter and a valid passport. So people who apply for this program, they have to have an ITIN card. And in the past, I did one loan for the person who he in the process of getting the ITIN card, so he provided me the IRS ITIN letter, and that acceptable too. Okay, the rate for this program is also really high. I think it's 9-point-something% for 30-year fixed, for 20% down. Actually 30% down. Okay, I will go over that more. Beside the ITIN, they have to provide a passport. In the past, we had a client with the expired passport. You know what we have to do? We have to wait for him to get a new passport. We have to go to San Francisco to do a urgent renewal passport to get the loan done. There is no way to get around it. Like when we ask for the passport, the client say, "My passport expired. Can we waive it?" And we talked to our lender. The lender said, "No. You have to have an active passport." So when you have an ITIN client, you ask them, "Is your passport still active? If no, go get it done." Okay, before you even show them home. But still showing home, but just have to get it done. They have to know that's one of the requirements. And they also need to provide us an ITIN card or the IRS ITIN letter. In the past, I did a loan for a father and a daughter because we need the income from both. And the dad has ITIN. The daughter has social security number. Guess what that loan is? ITIN or regular loan? ITIN loan. So as long as we have one person in the loan application have an ITIN, that loan is an ITIN loan. Doesn't matter how many other people have social security number, but one person have ITIN, that's ITIN loan. Okay? Any question? People on the Zoom? No? Okay. Talking about credit, somebody read for me because it's behind me. Jose, read me the first one.
Credits, minimum 1 FICO, minimum 660 for purchase, 680 for cash out. No credit score is acceptable with non-traditional trade lines. Each trade line must show 12 months activities, percentage of 12-month rating. Minimum 4 active trade line, traditional trade lines or non-traditional credit references. Non-traditional trade lines, utilities, VOR, housing payments, auto, installment loan payments, renters insurance, lease payment for a car, local store payments, furniture, appliance, school, tuition, childcare, foreclosure, VK, short sale, 7 years, 3 years, case by.
Okay. I want QD to explain the first line for me. Minimum 1 FICO. Explain that line for me, QD. So the borrower had to have what?
So normally we have 3 FICO score, but in this case, if you have only 1 FICO score, it's acceptable.
It's acceptable. And then what is next to it, QD?
No credit score.
No, the minimum.
Oh, minimum. That means you have to have at least 660 for purchase transaction, and if you want to cash out, you have to have at least 680.
Good, QD. So 660 minimum FICO score. Basically, for whoever want to buy a home with the ITIN borrower, and if they want to cash out, the credit score has to be higher, 680. Okay, let QD do the next explanation because he's gonna be the next person who do the training. So.
Second, we know credit score is acceptable with non-traditional trade line, non-credit.
Okay, let me do this, QD. This is new for you. So non-traditional trade line. We talk about traditional trade lines. What are traditional trade lines, Alex? Traditional trade lines, just trade lines.
Yes, right.
What are they? What are the trade lines?
Like credit cards or maybe stores or
Credit cards, auto loans, mortgage, student loans. Those are traditional trade lines.
Okay.
So non-traditional trade line is right here, cutie. So non-traditional trade lines are utilities, VOR verification of rent, housing payment, auto insurance, installment loan payment, renter insurance, lease payment, local store payment. So those are non-traditional trade lines. So these trade lines are allowed for ITIN borrowers who have no credit score. But they need 4 trade lines, 4 non-traditional trade lines, 12 months. So if somebody have no credit score is okay too. You know that? No credit score is acceptable. But they have to provide 12 months of 4 things. 12 months consecutively of 4 things. So for example, they provide 12 months of utility bill, or 12 months of car payment, or 12 months of tuition fee, or 12 months of insurance payment. They have to provide that. They don't need credit score as long as the 12 months showing that they pay on time all the time. Okay? If somebody have credit score, each trade line also have to show 12 months of activity and 12 months of rating. Okay? So it have to have activities. It can't just be no activities. Okay? And it have to have rating. It have to be showing, rating means it show on the credit report. Okay? See, minimum 4 active traditional trade lines or non-traditional credit reference or non-traditional trade line. So you guys, this is awesome for ITIN people because a lot of them, they don't have credits. And some people, they have credit score, but if their credit score is not 660,
How can they have credit? They don't even have a social security number.
It's because-
The IT number will have credit.
It's because they changed
Yeah,
it.
IT number.
They changed
I
it
see.
to 4 years ago.
The IT people have credit score.
Oh.
And
Even-
for
even
people
750.
who have credit score, but it's less than 660, we can use the non-traditional trade line for them. This is awesome. Before, if it show they have a trade 660 or below, less than 660 FICO score, we cannot do the loan for them. But now we can, and we have to use the non-traditional trade line. And we for the mortgage team, when because of this person have the credit score, and because of it's lower than 660, and we want to use this, we have to do a credit supplement. Okay, have to do credit supplement for them. Okay, for short sale, foreclosure, bankruptcy. For bankruptcy, they require 7 years after the foreclosure. After 7 years of the foreclosure completion to qualify for this. For BK bankruptcy, we need 3 years after dismiss or discharge. And for short sale, case by case. So we have to look into every single thing before. Any question, people on the Zoom, people here?
So what's
Yes, question about that. I'm not clear. I still understand that. It's very like most of problems activities. And what's the percentage? What is that?
12-month activities and 12 months of rating.
What's the end? And what's the
And,
percentage?
I'm sorry, 12-month activities. 12 months, because I did this slide just 10 minutes before I came over here, so sorry, it's just messy. 12 months of activity and 12 months of ratings.
Oh, and, okay, I see.
Thank you. Thank you for showing me that, because I didn't even notice.
And what's the down payment on this?
Okay, it will coming. It will coming.
Oh, I'm sorry.
Okay, income. Salary borrowers, listen, this is so cool. We don't have to turn in anything except a written VOE. Is it awesome? You only need written VOE. You don't need pay stuff, W-2 tax return. This is so cool. In the past, I have to submit everything. In the past, I have to submit them everything. Okay, for self-employed, we don't need 2-year tax return. We need the P&L. Profit and loss and business license. Take note, Anna, because we have a test next week, as you request. So, remember, this is important. For ITIN people, we only need the written VOE. We don't need the income documentation, just VOE. Okay?
Yeah, I just want to be a little bit clear on the under self-employed borrower. So those are 3 things. 1, 2-year tax return and year-to-date P&L, and then the third 2 years business lesson. Do we need all 3 of them or just need 1 of them?
We need all of it.
All right.
Okay?
What is the year-to-date P&L? Is that, let's say Peter get a loan right now, October 2022.
Awesome.
Is that the current 6 months P&L or
Good question.
up to this point
Good
P&L?
question, Elvis. Very good question. If we submit the loan today,
Right.
October 20-something,
Right.
we need to provide a P&L from January 1st of 2022 until September 30th, 2022.
I see.
It's very up to date.
I see.
Because they also want to know what is the
Right.
income currently.
Yeah, it's just really, because of beginning next year, January 1st, 2022, up to this point, today is October 25th, so will be like there's a 6 months window prior to this moment when your loan is submitted.
Right.
Okay.
We have the whole entire.
Okay, that makes sense.
And also for people who do their own P&L, they have to submit bank statement that support the P&L, the business bank statement that support the P&L.
Yeah, that's a
But
six,
for people,
6
they
months.
have the CPA doing the P&L, they only need to submit the current balance. Okay?
Thanks.
And we also require 3 months of PITIA reserve. What is PITIA, everyone? Who know?
Yeah.
Principal interest.
Kitty?
Principal, interest,
tax, insurance, and associate.
Yeah, association. So HOA kind of
HOA.
HOA association HOA. So PITIA mean everything that you have to pay a month. But we need 3 months of reserve of the subject property. Okay. Gift fund is allowed for owner occupied and second home only, not for investment. Okay. Any question, people on Zoom or people here?
I have a question. For
Yes.
gift fund, how many percent they can get a gift?
It doesn't say.
can
So
they-
I think as much.
Okay.
Awesome, right? How do we do gift fund, everybody? Not only how do we do gift, what is the easiest way to do gifts that we don't need a lot of paperwork?
A gift letter, pay at closing.
Give a letter from a donor, have to sign it, right? And then at closing, the donor will wire money from their account to the escrow. But for jumbo loan, when we provide gift, we have to provide donor bank statement, period. Right now, we
Even
do.
if at closing.
Yeah. So we, right now, we do jumbo loans. We have to provide donor bank statement showing the gift amount is valid and the donor is able to give. So for jumbo, we need to provide donor bank statement. No matter what way we do it, we have to provide bank statement.
The MC, regarding that gift letter, is that just the donor just sign on a gift letter? Does this letter need to be notarized?
No, just the donor sign it. The donor sign and the borrower sign. We don't need notarized.
Okay.
That's easy, right?
Yeah, that's easy.
Okay, here, what Sergio asking. So we only have the matrix. I think by now everybody know how to read the matrix. It's also divided into sections. The first section is primary residence and second home. And the second section is for investment property for our non-owner occupied. So now we will read the second row is the table is for primary residence and second home, but we talk about purchase and rate and term refinance. So, and we look under the property type, so we can do 1 unit, single family home, PUD, townhouse, and condos. And we also can do 2 to 4 units, okay, for purchase, refinance, or for primary home and second home. Maximum loan amount is what?
1 million.
$1 million only. Not 1.5, not 2. So you have to remember this. 1 million only. So this cap the ITIN people from borrowing a loan. They can only go up to $1 million, no more than that, okay? And look at the down payment. Sergio, for someone with 700 FICO score, what is the minimum down payment?
So 20%.
20%. Okay. Interesting. This morning when I run the scenario, it's asked for 30%. Okay. So I'm not sure it's up to date, but I got this from the website this morning. Interesting. This morning I run a scenario and it asked me for 30% down payment. Anyway, even the FICO score was 740. Okay, well, I will verify, but from this matrix, Sergio is correct. For 700 FICO score with the loan amount up to $1 million, they only need 20% down payment, okay? Okay, Elvis, with 660 FICO score, what is the percentage of down payment?
35.
No, 660. 660.
Did you say 70 to 75?
660.
660, that's 25%.
25%. 25. So with 660 middle FICO score, it's 25% down payment because the loan to value is 75%. People on Zoom, are you follow? And do you follow what we say? Can you unmute yourself?
Not quite.
Okay. Okay, good. Good. I want to hear that. Okay, so you look into the max loan to value and CLTV. In this case, we look at the loan to value only because we only do one loan here. So loan LTV means loan to value. Okay, if somebody buying a home $1 million and they borrow a 800,000 loan, 800,000 loan divided by 1 million, it is
80%.
80%.
You're talking about the primary residence or talking about investing property right now?
I'm talking about the first line, the purchase refinance. The very first line, you go to
Primary resident.
primary resident. The very first line, 80%. You see 80% LTV.
Yeah. Mm-hmm.
You're right here. Let me move the cursor. Here we go. So 80% LTV mean if loan amount is 800,000 and the home that the purchase value, the purchase price is $1 billion. Oops, what I'm doing? So 800 divided by $1 million is 80%, meaning they borrow 800,000 loan amount and they have to bring in 200,000 at down payment, and that's 20%. So for people with 700 FICO score, they have to have 20% down payment. That means the LTV 80%. For people who have 660 FICO score, they have to have 25% down payment because the maximum loan to value allowed is 75%. Okay, that's for purchase, refinance rate in term for resident or second home.
No, hold on. Because I said that maximum amount of $1 million, right? So max LTV in this case is the $1 million equivalent with 80%. Because we're talking about the maximum amount, not the purchase price. If it's the maximum amount, 80%, that's the $1 million.
Yeah.
I can't hear you. What do
So
you say?
what you mean is the max loan for assuming you bought a home $800,000, you need to have $160,000 down, and you borrow only $640,000. That's what I mean, 80%. It doesn't mean $1 million home. Yet it's the same thing.
Oh, okay, good, G. So I'm not sure. I because I couldn't hear you well. I don't know what the system today really. The sound really bad. I cannot hear really well. So for example, it just means if whatever purchase price is, you have to have 20% down payment if your client have 700 middle FICO score. 20% down payment because the LTV 80%. And for people with 660 FICO score, whatever purchase price he gonna buy, he can only borrow 75% loan amount of the purchase price. So that means he have to bring in 25% down payment. Okay, and the loan amount is only, the maximum loan amount for this program is 1 million only. I think this is important. This is gonna be on the test. What is the maximum loan amount for IT?
Yeah, MC, I still have another stupid question.
No question is stupid.
No
Every
question is
awesome.
stupid. I don't know who came up with this guideline, like a minimum FICO score, 700, 660, 620, 640. I mean, let's say you are the real lender's underwriter. You really look into breakdown such a detail, because how can they judge just about 20 point difference in FICO score and not determine what's your loan amount percentage? Does it make sense?
No, I'm so confused. Okay, let me try this slowly. I'm sorry because of my next time just a headphone instead. They say the maximum amount of $1 million, right? So the max LTV is 80%. So that means I can buy a house worth $1.25 million. So the maximum amount is $1 million.
The house can be at any price. If you buy a $2 million home, okay, in this case, your maximum LTV is 50% because the loan amount you can borrow up to only $1 million. Am I answering this question?
I mean, borrower need to come out more down payment.
Yeah.
I see.
Okay, so this is just the guideline, and we have to follow it. So the loan amount is maximum is $1 million, right? If somebody buy a home of 500,000, and his FICO score is 700, so 500,000 purchase price, maximum 80% loan amount. That means of $400,000 loan, and he had to bring in $100,000 as down payment, which is 20%. But someone else buy $1.5 million home, and his FICO score is 700.
Okay.
1.5 million, the 20% of it is
1 million two, 1 million, the loan amount will be 1 million too, 300,000 is the down payment.
so even the loan amount 1.2 million, that is not covered by this program because this loan up to only 1 million.
Just
So
the
what he
maximum.
had to do is he can only borrow $1 million, and he had to bring in $500,000 for down payment.
So whatever the purchase price, you time with 80%, that's all. But it should be under $1 million.
The loan amount
The
had to
below
be.
$1 million home,
Yeah.
value.
That's my question. That's why
Awesome. Good. Thank you for asking because that clear everybody else. So the purchase price can be anything,
Yeah.
but it had to be under the $1 million loan amount. And then we also have to follow the guideline of the FICO score and the
Basic
down
FICO
payment.
score as
That's it.
well.
So it's the same thing for everything else.
I have another question, MC. Yeah.
Question, go ahead.
You are okay, right?
I'm okay. I love questions.
If one of the agent have many questions, you're okay, right?
I'm fine. I love questions because that's where I know what I'm missing, what
Let's
I
see.
don't tell you.
Let's see, as a buyer's agent, we can very easily get a loan pre-approval letter from you.
Yes, okay, you bring in your buyer and you give us all the document. We're gonna review. Our mortgage team is awesome. They're gonna do the pre-approval for you.
But sometimes it can be very quick, you know, the buyer's agent want to make an offer right away. And
You have to give us enough time, so try to give us a day or 24 hours. Sometimes it's urgent, give us a few hours.
I guess the question is that you won't get a pre-approval letter. You will get a pre-qual, which we don't give. A pre-qual letter. We don't give pre-qual letter.
Okay,
We
yeah.
have to run the
Pre-approval.
credit, we have to look into the bank statement, we look at
Right
everything.
now, is basically, you know, the all kind of crazy going on. You know, if a lot of people, I mean, in a layman, common people, really confused with pre-qualified, pre-approved, really.
Okay.
And,
So tell them right now, because most of the time we still have to do no loan contingency, and in order for you to do no loan contingency, you have to really do like approval
Now,
process.
the customer has to have a driver license or not?
Driver
Only passport?
license.
Can they have a passport? The passport will as a verification.
I think
As a
so.
verification of.
Yeah, I think the passport we will do because we need some identification to when you the notary come for you to sign. I
Yeah.
think so.
So, pre-approval letter is under PacificWide
PacificWide,
letter.
yes.
And PacificWide, is that a mortgage banker or is a mortgage broker?
We are a mortgage broker. We are a wholesale mortgage broker. That's why we have a lot of products and we have the best rates.
Which lender you basically working, you know, putting a loan through? More
We
what's the
do-
major
See you
lender?
next week.
Thank you, Jay.
Thank you.
See you next week, come do the test.
All this year, what's the major lender?
$20.
We do conventional loan, we do with UWM. For non-QM loan, that means all the crazy loan that we talk about, we do with AmWest, or we have other loan lender like, what is it? AmWest, and which other one we using? I forgot, but for the government loan, we do with Sierra Pacific, and for jumbo we do with TextEU. We have a lot more lenders, but we work mainly with those lenders.
Yeah, because those lenders, it tend to be a little more lenient, you know, when it comes to the underwriting, is that right?
Yeah, we
Because-
work with good lenders, the lenders that willing to close the loan, not the lender giving us a hard time and not closing.
Yeah,
right?
the lender gave you the most hard time, I think it's the Chase Bank.
There are a lot of lenders, they are in the business to give me a hard time,
Or
right?
Citibank give you a lot of hard time.
Oh, yeah. So we talk about the investment property here. You see the down payment required is more, even, so for example, the loan amount maximum is $1 million, with 700 middle FICO score, the down payment is 25% instead of 20%. But again, I'm gonna check again. I don't know why this doesn't support what I see this morning, but I will check. But right now, you guys just based on this one. Before we go on, we remind you all the products we have here. Those are the irresistible offer that you can offer to your client. If you talk about this on social media, this is a way for you to get new buyer, new borrower, new client basically. You're gonna get a lot of investors calling you because these products really attracting investors as well. Okay? And people from everywhere will call you, not just California. Okay? And next week we're gonna do some tests to see how we remember things. Before we're done, I wanna see one video. Anna, can we look at this video? Because we've been talking about sales. You have any questions?
Yeah, how many banks do we have for IT? Only one?
For ITIN, we have many lenders, but the one who only close loan is AmWest.
Okay.
AmWest close every loan we submit.
With the right down payment.
Yes. AmWest is awesome. Okay, so we've been talking about sale, how to sell, mastery sale. And I'm gonna introduce to you Tony Robbins. He's a master of sale. He's awesome. So we're gonna watch his short video. So sit back and relax, enjoy your video.
When I'll never forget, he was at my home in Sun Valley, I just got the meeting, it was New Year's, and everybody else was standing watching the fireworks, and I was sitting at the table, and I was basically doing a brain melt, sucking out of his brain everything I possibly could. How do you think about this? What do you, how do you market? And here's what I learned from Steve. People don't buy products, they buy feelings. People don't buy products, they buy states. People don't buy products, they buy identities. And he and I went back and forth for about 2.5 to 3 hours and became lifelong friends for the last decade and a half. And what I learned from him is, how many of you know the 6 human needs? Let me see your hands. Raise your hand if you know the 6 human needs. So real quick, for those who've never heard it before, what's the first need that all human beings have? It's not a goal, it's not a desire, it's a need. What is it, quick? Certainty. Everyone has a need for certainty that they can avoid pain, or ideally they can have some pleasure, but that's a survival instinct. If you have total certainty all the time, you will feel completely what? Bored. So what's the second human need? Quick. Uncertainty, which another word for uncertainty is variety. The need for surprise. Who here loves surprises? Say aye. Well, you like the surprises you want, right? Surprises you don't want, you call problems, but you need them too to be alive, and business provides plenty of variety, right? What's the third human need? The need to feel significant. Significant is the third human need, to feel significant, unique, special, important, significant. Who has the need to feel significant? Who? Everybody. What do people say? I don't want to feel significant. That's how they get significance, by saying I don't need significance. I'm more unique than you. You have the significance, I don't. Some people get significance by buying a $500,000 or $1 million car. Some people get significance by saying I don't spend any money. I don't need a nice car. I'm so special, I don't need a nice car. It's called a reverse ego symbol. Same need, they just go about it a different way. But if you're totally significant and unique and special, that feels good, but then you feel alone because the fourth human need is the need for connection and love. Who needs connection and love? Everybody. And by the way, those first needs everybody gets. Certainty, uncertainty, a variety, significance. Even if you have to make up stories about yourself, you'll find a way to feel significant, right? And a feeling of connection, if not love. The final two needs are the needs of the spirit. You must grow is number 5. You grow or you, if a business is not growing, what is it doing? That's a fact. There's no such thing as a stable business. You're growing or you're dying. There's no plateau that you can stay at and stick around. And lastly, number 6, you gotta grow, and with what you grow, you have to contribute, because everything in the universe is either growing or dying. Everything in the universe is contributing or it's eliminated by evolution, if nothing else. We're made for that. Now, having said that, when I was with Steve that night, I explained these 6 needs, and as I'm explaining them, he grabs me physically by the shoulder. He goes, that one. And I just said significance. He goes, that's where I've made all of my money in my entire life. He said, people will pay disproportionately to feel significant than for any other need. He said, people will spend more money. People want love, but they think they'll get love if they're significant, or at least they'll get laid if they're significant. He said, so I've built the most expensive hotels in the world, and I charge more than anybody else, and even when Las Vegas in 2008 went through its drawdown, Steve kept his prices high. Why? Why? He wanted to still be the most special place. He came to this seminar, sat in the front row, And there's almost nothing that makes me uncomfortable, but I'm like, what am I gonna teach him? But he sat in this event, at lunch, took me to lunch, and he goes, this is the most valuable session I've been in the last 10 years. I know what I'm gonna do. This is in 2008. He said, here's what I'm gonna do. I'm going to, when all my competitors are shrinking right now, because they're trying to survive, I'm gonna go build this giant beach club that goes right to Las Vegas Avenue. I'm gonna build this new entrance. I'm gonna up my services. He said, I'm gonna do what you teach. What is the fundamental success to becoming wealthy? It's only one thing. If you wanna be wealthy, you have to do more for your clients than who? Than anyone else. You have to add more what? That is the entire secret to wealth in business. If you want it in one sentence, it's simple. Do more for others than anyone else is doing, add more value, and you will own them and you will own the marketplace. He goes, you know what I'm gonna do, Tony? When everybody else is shrinking, I'm gonna add more value. So all the high-end people are gonna see I'm doing more, and they're gonna come to me, and this down period is gonna be the most important period of my entire career. Because when the economy comes back, and those guys start giving services, I already own these people. They're not gonna leave me, I'm their home. You gotta ask yourself, what do I do to add more value? And many of you think adding more value means cutting your prices or doing something of that nature. Sometimes adding value is raising your price. It's crazy. Raising your price can increase your sales if it's the right piece. Now, if you raise your price and do more, no question that could be the right thing in some cases. Some of you, your market is the cheapest price. Maybe it's time to change that business model, because unless you're Walmart or Amazon or somebody that can do things at massive volume and lose money and sustain it, you might need a thing called a margin. If you're gonna be successful in business, you want a high margin. High margins come from high human needs being met.
You know, my wife's like, what'd you do? After, 6 months of doing this, she's seeing all the changes that are happening.
Ooh, that's awesome. Wow, how do you like it? What he said? In the downturn time, what do? Give more value, higher your price. My God. I talked to one of the agents over the weekend, and he said he had to lower his listing commission. I said, oh my God, no. Now is the time to not giving your client your low commission, because it's harder to sell. You cannot do that to yourself. That's what he said. It's really up to what you can do for your client. It's the value you bring in the table. So adding more value to me, whatever you learn, they don't know. Why don't you talk about it on your social media? Or you make phone call. You don't do social media, make phone call. Call people, tell them what you know. That adding value. You can call your other agent friends. They don't even have the products. They can say, hey, I have a client who might need that. Can you help my client with the loan? Nowadays, any income is awesome, right? You just do real estate. Why don't you get some loan and you get some commission from loan? Now I do anything. I do mobile home. I didn't do mobile home before. I do mobile home now. At this time, I provide more services to my client. It's making more money, right? Mobile home commission is really awesome. 5%, right? And not many people out there try to take away your client. And we do mobile home loans too, by the way. So just be the person who give a lot of service, adding a lot of value to people right now. He said by the time the other people try to work, you own your client already. Because I see that a lot of people nowadays, they mentally down. They feel like, oh, it's so hard to sell because now the rate is 8%. My client try to back out. My seller doesn't want to pay much. So they kind of feel some stress, anxiety, and don't want to work, staying home doing nothing and feel miserable about themselves. Well, you are still here. That's awesome. You are here. You learn new stuff. You talk about it. And then people know you know more. They become your client. By the time the other guy get like a year or 2 years or 3 years later, when the rate go down, they start, okay, let's go sell again. Now I can sell. You own all their clients already. They lose. Be that person. So he's awesome. Tony Robbins, that's why he owns more than 100 companies. So please, talk about what you learned. I feel like you guys all get it. You all know what we're talking about. Please, use that knowledge. Share with your client. You can text them, you can call them, email them. If you want to do email everybody. Say, I have all the loan products. I think I can help you or your friend or your families. Do you know anyone who need my help? If you really ask for a referral, you go straight forward. Say, I'm calling you because I think I need your referral. You know anyone who need my help? I'm doing real estate and loans. You know me for a long time, but now I think I need your help. Please refer me to your friends and your family.
Let me see, I have a question here. Regarding a loan for a mobile home, besides all those lenders, providing mobile home loan, is that they have some kind of restriction, like that particular mobile home was built prior to 1978. Is that making it tougher to get a loan?
We cannot get a loan whatever built before 1976. We cannot.
Before,
Yeah, before
19?
Yeah, because they're too old.
Before 1978 or 76?
76.
76.
Yeah. So there is a restriction. We have to look into everything.
Right.
Yeah. So I hope you really make use of what you learn here, because you spend your time here. So please make use of it. Please bring in more clients because of what you learned. Don't just waste it. Any question before we done? No? Thank you so much. Try to go out and get all the people there for yourself.
Thank you.